Welcome back, everyone. This series, Bitcoin Road to 200K, is where we step away from the noise and focus on the forces that actually shape Bitcoin's long-term path. Some weeks we talk about price action, other weeks about psychology. But today we're looking at one of the deeper drivers that could influence Bitcoin's next major move. Because if Bitcoin is ever going to push toward a new all-time high, or even toward that legendary 200,000 mark, it won't happen by accident. It will happen because capital moves from one global store of value into another. And today we're focusing on one of the largest and most overlooked sources of potential inflows, gold. If you want to understand the long-term drivers instead of getting lost in short-term noise, make sure to like the video and subscribe. It helps the channel and it keeps you on the right side of the climb. Now, let's dive in. Every major breakout in Bitcoin's past had a real driver behind it. It wasn't luck, it wasn't blind hype, it was adoption, liquidity, institutional access, and in many cases a shift in how people store value. If Bitcoin is going to make its next meaningful move up, it needs a new wave of demand, a new source of capital, and one market sits right next to Bitcoin. Massive in size, slow in movement, but perfectly positioned to influence Bitcoin's trajectory: gold. When people hear the term capital rotation, it can sound complicated, but the idea is simple. Gold and Bitcoin compete for the same role: a global store of value outside the traditional financial system. And because the gold market is enormous while Bitcoin is still relatively small, even a tiny shift of capital from gold into Bitcoin can have a massive effect on price. To understand how powerful this can be, let's look at a recent post from Bitcoin magazine. They visualized what happens if just 1 to 5% of global gold holdings move into Bitcoin, and the results are striking. If 1% of gold rotated into Bitcoin, the model already puts price around $134,000. That alone would push us well into new all-time high territory. If 2 or 3% moved, the range climbs quickly, anywhere between $160,000 and $180,000. That's already brushing against what many see as potential cycle top territory. And if 4 or even 5% of the gold market made the shift, you're looking at the $200,000 to $240,000 range. Not because of fantasy, but because of simple supply and demand dynamics in a small, scarce asset absorbing capital from a much larger one. So when people talk about Bitcoin potentially reaching $200,000, it's not magic, it's math. Is a gold to Bitcoin rotation realistic? Surprisingly, yes, and it may already be happening slowly. Bitcoin is easier to store, easier to move, easier to verify, and, well, infinitely more divisible than physical gold. Institutions now have clean, regulated access through ETFs, something gold had for years, but Bitcoin only recently achieved. Younger investors naturally prefer digital assets, and both companies and some governments are beginning to view Bitcoin as a legitimate alternative reserve. Of course, the rotation isn't explosive yet. Gold has thousands of years of history behind it. Some institutions are still not allowed to buy Bitcoin, and volatility keeps conservative capital cautious. So no, a massive rotation isn't guaranteed, but a gradual rotation that's already visible. So this all sounds good in theory, but is anyone actually doing it? Are real institutions, funds, or even governments already rotating value from the old system into Bitcoin? The answer is yes, not in a dramatic overnight way, but quietly, steadily, and in a way that starts to matter. On the investor side, we can already see capital moving. Over the past months, US spot Bitcoin ETFs have attracted billions of dollars in inflows, while gold-backed funds have seen meaningful outflows. That doesn't mean someone is selling physical bars to buy coins on a hardware wallet, but it does mean that capital, which once chose gold exposure, is now choosing Bitcoin instead. At the same time, we have companies that have effectively treated Bitcoin as their version of digital gold. The best-known example is Strategy, formerly MicroStrategy, which has transformed itself into a kind of Bitcoin treasury company. Instead of sitting on cash or adding more gold, They've spent years converting a large part of their balance sheet into Bitcoin, explicitly because they see it as the superior long-term store of value. And then there's the sovereign level. In the United States, a strategic Bitcoin reserve has been established, formally recognizing government-held Bitcoin as a national reserve asset alongside traditional holdings. Some U.S. states are going even further. New Hampshire, for example, has passed a law that allows a portion of public funds to be allocated into both precious metals and Bitcoin, putting BTC and gold in direct competition within the same reserve playbook. Other countries hold Bitcoin indirectly through seized coins, which they've chosen not to sell, and several governments are openly exploring whether Bitcoin should play a more formal role in their reserve strategy. None of this means the world has abandoned gold. Far from it. But the important point is this. For the first time, we're seeing real entities, funds, corporations, and governments shift pieces of their store of value allocation away from the old system and toward Bitcoin. And that's exactly the kind of slow, structural change that can drive the next big repricing. If just 1% of gold moves, Bitcoin likely heads above $130,000. If 2 to 3% move, $160,000 to $180,000 becomes reasonable. If 4 to 5% move, $200,000 to $240,000 is mathematically straightforward. This is why the upside often surprises people. Many think in retail numbers, but retail isn't the driver of the next major move. It's capital reallocation. I don't base my long-term thesis on a specific percentage of gold inflows, but I do pay attention to this trend because Bitcoin doesn't need miracles to move higher. It only needs a small share of the global store of value market to reprice dramatically. That's why I stay calm. That's why I keep stacking. And that's why I focus on demand structure, not daily volatility. If even a modest part of this rotation continues, the road to $200,000 is absolutely within reach. Not promised, but structurally possible. If you found this breakdown useful, give the video a like and subscribe if you'd rather understand the long-term climb than get lost in short-term noise. Next week, we'll dig into another fundamental force that could shape Bitcoin's next major move. I'm Alpine Hurdler, and I'll see you on the road to 200K.